All right, welcome back. Now, after several weeks of anticipation, the Central Bank of Nigeria has released the guidelines of the much-awaited flexible foreign exchange rate policy. The Apex Bank released the guidelines, I should say, on Wednesday, with CBN Governor Godwin Emefiele saying the regime would be determined by market forces. Now, that announcement came after the CBN met on the 24th, that's May the 24th, to discuss a foreign exchange rate policy that will allow the bank retain a small portion of foreign exchange for critical transactions. Let's take a listen now to Godwin Emefiele make the announcement releasing the guidelines for the new forex policy of the country.
Operate as a single market structure through the interbank and autonomous window. 2. The exchange rate will be purely market-driven using the Thomson Reuters and FMDQ order matching system as well as the conventional dealing book. 3. The CBN will participate in the market through periodic interventions to either buy or sell foreign exchange as the need arises. 4. To improve the dynamics of the market, we will introduce FX primary dealers who would be registered by the CBN to deal directly with the bank for large trade sizes on a two-way quote basis. 5. These primary dealers shall operate with other dealers in the interbank market, amongst other obligations that will be stipulated in the foreign exchange primary dealers guidelines, which would also be released immediately after this press briefing. 6. There shall be no predetermined spreads on foreign exchange spot transactions executed through the CBN intervention with primary dealers, while all FX spot purchases by authorized dealers are transferable in the interbank foreign exchange market. 7. The 41 items classified as not valid for foreign exchange as detailed in a previous circular by the CBN shall remain inadmissible in the Nigerian foreign exchange market for foreign exchange. 8. To enhance liquidity in the market, the CBN may also offer long-tenured FX forwards of tenure ranging between 6 and 12 months or any tenure to authorized dealers. 9. Sale of foreign exchange forwards by authorized dealers to end users must be trade-backed with no predetermined spreads. 10. The CBN shall introduce non-deliverable over-the-counter Naira-settled futures with daily rates on the CBN-approved FMDQ trading and reporting system. This is an entirely new product in the Nigerian foreign exchange market, which would help moderate volatility in the exchange rate by moving non-urgent FX demand from the spot to the futures market. The OTC FX futures shall be in non-standardized amounts and different fixed tenors, which may be sold on any dates, thereby ensuring bespoke maturity dates. 13. Proceeds of foreign investment inflows and international money transfers shall be purchased by authorized dealers at the daily interbank rates. Also, non-oil exporters are now allowed unfettered access to their FX proceeds, which shall be sold in the interbank market.
Now, since the CBN's announcement, business owners in Nigeria as well as foreign investors have heaved a sigh of relief owing to the imbalance and uncertainty the previous policy created. Also, the International Monetary Fund, a major critic of Nigeria's foreign exchange corps, has welcomed the decision made by the CBN. Traders say the Nigerian naira is expected to fall next week when the new market foreign currency trading starts on Monday. But the CBN says it is reasonably optimistic the naira will eventually settle at around 250 to the dollar after the initial spike when the policy kicks in. I'm now being joined on the program by Olawale Oluso, who is an investment research analyst at investment bank AfriInvest based in Lagos, Nigeria. Mr. Oluso, thank you very much for joining us on the program. First, let me start by asking what your take is on the details of the flexible foreign exchange policy that the central bank released last Wednesday.
Okay, thank you for having me. Our position on the new FX framework is that it is indeed a step in the right direction. Here at AfriInvest, we have always held our position that the CBN need to make a major call on its pegged policy on the Naira, which has taken place for about 12 to 15 months, pegging the Naira at about 200 Naira when, all the variables that come into determining that price have depreciated. We think this is a step in the right direction. We think it will give the market the required liquidity and transparency to make the system work. And we think it has the capacity to bring in a lot of foreign capital flows that have stayed on the sidelines for over 12 months now, following the decision of the CBN to impose capital controls on the FX. So overall, we think it's a positive for the economy. General price level that has been galloping in the last 4 to 3 months, together with GDP contraction that we've seen, we think many of these macroeconomic variables should take a reversal following this policy. This will only take a short time, but we think key indicators in the system should improve going forward.
Are we absolutely sure that this policy would lead to an inflow of forex now from other sources other than the government?
Oh, definitely. We are confident that this policy will actually, rein in a lot of FX inflow have been staying on the sideline, with many of the major global index providers ejecting Nigeria from their index. And I'll speak particularly about JP Morgan and Barclays. I mean, these index providers have removed Nigeria from their index largely because the Nigerian currency market was accused of illiquidity and lack of transparency. I mean, now that the foreign investing community is certain about the outlook for the Naira, we think this certainty, once they test the system and they are sure that it is what it is, we think it will bring in the required Naira. I mean, the Nigerian market is still attractive, notwithstanding the headwinds that we've had in the last 12 to 15 months. We think equity prices are cheap, the yield environment is very, very attractive. So, I mean, and the US Fed has recently, kept rates unchanged. I mean, that's positive for the Nigerian economy. So we do not see any reason why foreign inflow should not come in now. The only concern for foreign investors is whether they will be able to exit when they need to. And once they test the system and they feel that it works, I think they should come in as expected.
And one thing that people have been talking about, I don't know if you share that opinion, some analysts have said, look, in the short run, we might likely, when this policy kicks in June 20th, we might likely see a spike in the exchange rate, and but that things would normalize eventually. Do you share that opinion?
There's no doubt about that. There's this pent-up demand that has been waiting for so long, and CBN has not been able to meet up with this demand. That has actually pressured what we have in the parallel market rate at the moment, with FX rate trading in the neighborhood of 350 and 360. But with the new structure in place, a lot of investors who want to exit the market, don't forget the crisis in the aviation industry, where a lot of FX cannot repatriate, their proceeds as a result of this. So there's no doubt about that. You are going to have an initial spike in FX, but all of this will normalize in a couple of weeks once the system stabilizes. And the CBN, I mean, I think the rough estimate from the governor is something in the neighborhood of 2 to 3 billion naira. If the CBN can provide the required demand, I mean, this will grease the system in the short run. The spike will come and go, but the system will stabilize in the long run. And of course, I need to re-emphasize the fact that the risk management products created by the CBN is also quite notable in this, to help stabilize and, of course, make the system more efficient in the long run. So you're going to take out a lot of unnecessary short-term demand if I can, simply lock in my price in the futures or forward market. So I think, yes, you have a spike initially, but this will normalize in the medium to long run.
If I may ask you to just hazard a guess, when this policy begins on Monday, June the 20th, at how much do you think the Naira may trade?
Well, at the moment, I think the challenge for the Apex Bank and, of course, the market is the actual rate that the Naira might settle, because at the moment, nobody really knows. But I think what is instructive is that after the spike, there's a huge likelihood for you to have parallel markets moderate. There's a likelihood that parallel market rate will depreciate, official market rate, will depreciate, parallel market rate will appreciate. So we are going to have a convergence in the neighborhood of 280 to 300 Naira. Of course, there will be a little spike that may not make that to be stable in the short run, but rates are likely to stabilize within that range in the shortest while. And the reason for this is simple. A lot of people have stashed hard currencies in their vaults. Many of these people will actually come out to come and sell this hard currency by the time they have an idea that there's a likelihood that the rate they expect might not be what they will get. If you've bought at something around 250 and you are likely to sell it for less, you probably want to sell now. So the excess supply will crash parallel market price. Official market rates will depreciate a little bit, but in the parallel market rates will appreciate, and you have a convergence around 280 and 300 in the short run. But I think things will definitely normalize to something even below that in the medium to long term.
So some people have actually suggested that eventually that the black market will disappear, that this policy will lead to the disappearance of the black market. Do you share that view?
Oh, okay. What we think the CBN is really working towards is a single market where you really take out all these unofficial markets. And but the challenge to that is that the fact that the 41 items, people that need FX to import these products are not. This is not a ban. I think the CBN also they restated that those 41 items have not been banned, but they are not allowed to participate in the new interbank market. And what that simply implies is that you are pushing all these people, all these end users, to the parallel market. So maybe in the short run, the parallel market will continue to exist vis-a-vis the interbank market, because these end users will still need to get the FX for the importation of these items that are not yet banned. What we think the policymakers should have done is to allow the trade policy, the fiscal policy operators put in place proper fiscal policy or trade policies which can be outright banned or increase tariff on this item. That will have taken care of that. But now that these items are still legally, you can still legally bring them into Nigeria, but you cannot get them in the interbank market. That simply means that in the short run, short to medium term, the parallel market will continue to exist vis-a-vis the interbank market. But perhaps if the CBN realized going forward that this is not necessary, and they scrapped that policy about the 41 item, maybe you may likely have a continued shrinkage of the parallel market, and with time perhaps there's a likelihood that that will go, but we are not very certain about that, because there are a lot of illegal businesses that go on even in this part of the world, that some of these elements would rather want to take it through the unofficial markets. So yes, we think in the short to medium term the parallel market will continue to exist.
Let me ask you this question now. When the prices of oil begin to pick up, because we expect prices to pick up eventually, when the prices of oil begin to pick up and Nigeria's forex earnings begin to go up, what would that mean for this policy?
Okay, our own in-house simulation has confirmed the fact that the Nigerian external reserve, our exchange rate appreciation, is the correlation is very consistent with movements in global prices of oil. So what that simply means is that with the new structure in place where FX price discovery or price determination in Nigeria is going to be largely market driven, what that simply means is that with appreciation in the global price of oil and increase in accretion to our external reserve, that simply means sentiment on Nigeria economy will improve, the economy becomes stronger, and that should also mean more inflow in terms of dollar currency. And of course, with a market-driven system, that simply means the Nigerian currency, the FX rate, will appreciate. There's no doubt about that. I think theoretically that is what that implies if we allow the new framework to operate the way it has been structured based on the CBN governor's announcement on Wednesday. So yes, it should appreciate, all things being equal.
Do you think JP Morgan might, on the basis of what has happened now, reconsider its decision and then bring us back to its emerging market index?
Oh, okay. If we go back to the reason why JP Morgan kicked us out of their index, I think they made mention of 3 critical points, which include basically the liquidity, the transparency, and the operation of the Nigerian FX market. With the new policy in place, the fact that these 3 concerns have been taken care of simply means that there's no reason for JP Morgan to keep us out of that index. I think what they can only wait for is to test the system to see whether it is sustainable. If they think it is sustainable and in the best interest of their subscribers and the people they are providing the index for, I think Nigeria is eligible to be relisted on that index. So yes, there's no doubt about that. We expect JP Morgan to go back on the initial decision to kick Nigeria out and relist Nigeria in the index. I mean, our bond market is ripe enough for that. The only reason why it was kicked out initially was because of the currency market concerns. And now that that is not in the picture anymore, we think they should reconsider. We strongly feel so.
All right, Olawale Olusi, thank you very much for joining us on the program. Well, that's it on the program. If you want to watch it again, all you need to do is just go to our website, www.tv360nigeria.com. You'll find this video and lots more there. You can also watch us on our YouTube channel. The address is youtube.com/TV360Nigeria. Now, do subscribe to get the latest videos and updates. And you can join us on Google+. That's at TV360 Nigeria. Or like us on Facebook. The address is facebook.com/TV360 online. You can also follow us on Twitter. Our handle is @TV360 online. Thank you very much for watching. We'll see you again next week.